over to the first speaker, who's Henry Chong. Henry is going to talk to us about Islamic finance tokenization. So I say ideally about 10 minutes and then time for questions after that. So over to you, Henry.
Absolutely. Let me make sure I start a timer. Keep the time. I hope everybody can hear me because I have overachiever that I am managed to catch both influencer A and B. So if you can't hear me, just gesticulate wildly at the camera or something, and I'll try and speak a little louder. Islamic finance, a topic that a lot of people are probably less familiar with in most parts of the world, but something that is rapidly emerging given its focus on digitization. Every aspect of finance these days is getting, let's call it digitized, and no surprise, a lot of the focus these days is around using blockchain technology, tokenization, etc., as people like Larry Fink like to talk about, to take what I call real-world assets, traditional assets like shares, bonds, funds, etc., representing them as tokenized instruments on various blockchains. There's also, of course, a huge amount of hype right now around crypto. The crypto hype cycle is back on with full furore, especially given the entire political environment. And I think Louise said there'll be some colleagues from the US talking about the environment that might be coming up in the US. But notwithstanding everything that's happened in the US recently, from start of this year, I think most large financial institutions have cottoned on to the fact that tokenization of assets is here to stay, including BlackRock's now 50 billion Bitcoin ETF. So what is Islamic finance? I won't get into all the details given my time, but basically under Sharia law, there are a bunch of things you can't do. Chief among them is no interest, which obviously precludes traditional instruments like bonds. You're not supposed to have speculation, so traditional futures contracts, outright gambling, things that are haram, like, weapons manufacturers, etc. And perhaps most importantly, these last 2 points, where investments are supposed to require profit and loss sharing. So if I invest money in a project, I am supposed to share equally in the upside and the downside, which is why traditional bonds, where I'm lending money where the success of the project doesn't directly affect me, as long as I get my money back plus interest, that is traditionally prohibited. And all Islamic finance instruments, of which there are many versions, but they're always supposed to be backed by tangible assets of some form. Why are people interested in Islamic finance these days? It's a big market, again, without getting into too many details. And the biggest aspect of it are instruments that people might call sukuk. I've got a lot of words in these slides. You could probably ignore most of them. I'll send their slides around later if people are interested. Sukuk are interesting because they're effectively structured, in my language, as repo agreements. So what typically happens is you will set up, and the issuer will set up a bankruptcy remote SPV. There'll be an underlying tangible asset, let's call it a power plant, that will get sold to that SPV, and there will be effectively a repo agreement, repurchase agreement at, let's say, 5 years in the future, where the issuer agrees to buy back the asset plus a fixed profit rate. For all intents and purposes, creating something that starts to look a little like a bond, but based on an underlying tangible asset. And interestingly, unlike a bond where if there's a default, I need to go and seize the underlying asset, the asset that backs a sukuk is already owned by the sukuk issuers. So for some reason, the issuer doesn't buy back the asset, you just keep the thing. And a lot of countries, Middle East, and including non-traditional Islamic finance countries like Hong Kong, have very rapidly gotten very interested in these instruments, quite frankly, because they see it, number one, as a way to get access to huge untapped markets, but also because it fits rather nicely for a lot of banks into their ESG mandates. There's a lot of focus on things like green bonds, the E part of ESG, and people have always struggled to figure out what exactly the other 2 letters mean. The nice thing about sukuk and a lot of Islamic finance instruments is that they are binary. So I don't think I've written it down here, but for any instrument to be Sharia compliant, you need to have a Sharia council designated usually by the country or the country's main regulator that will bless that instrument as being Sharia compliant. So it either is or it is not. And that means that, assuming you believe that fits into your ESG criteria, you can nicely check that box. Unlike a lot of green bond issuances, where fund managers, banks, etc., they worry about where exactly the line is, whether it's green enough. So it's a huge market, it's growing rapidly, and for large swaths of the global population, it is technically the only thing that they're supposed to invest into. That's not entirely true today. There is such a lack of Islamic finance products that people say, well, I can't put all of my money, even as an observant Muslim, into pure Islamic finance instruments. Maybe I put half. But in theory, that's not supposed to be how it works. On the other hand, you have a lot of Islamic banks and financial institutions that are still very, very physical paper based. For tokenized transaction that we did when we were buying some underlying instruments, the banks that we were working with were very proud of the fact that, special for us, we did not have to do fax settlement of instructions and we could jump to email. But certainly there's no APIs or anything like that. And much as it pains me to say, Islamic finance probably is about as undigital a corner of finance as you get today. Probably, I suspect, because again, they have a lot of forced clients who have to use Islamic bank services, whether or not those services are particularly digital. Again, if you are an Islamic Muslim or an Islamic financial institution, your cash accounts through which you move money need to be Sharia compliant. The securities and the security accounts, the custodians holding those securities, all need to be Sharia compliant as well. So you're basically limited to a small network of Islamic banks and other FMIs that can handle that kind of flow. And you need to make sure that at no point in the chain does it touch a non-Sharia compliant institution, because then the entire transaction gets void, at least in terms of Sharia terms. People are interested because there's also a huge emerging population, tons and tons of countries with lots of people that have high Muslim populations, high unbanked populations that are rapidly coming online or looking for the same banking and financial services the rest of the world is. And they are, especially in those emerging countries, for a variety of reasons, very keenly focused on purely Sharia compliant services. So there's a huge number of Sharia compliant fintech brokerages, for example, springing up in all of these countries, trying to tap these untapped markets. Again, I'm going to skip over this real fast, except to say, interestingly, Sharia scholars have very, very early on embraced blockchain and tokenization. Bitcoin was very quickly deemed to be Sharia compliant, way before it was even recognized as property in most jurisdictions. A topic I remember in the early years of us doing these conferences was of much debate. But Islamic scholars looked at the underlying nature of Bitcoin and the transactions and say, hey, it meets all of our criteria. It doesn't hit any of the things that it's not supposed to hit. Why should it not be Sharia compliance? And they've likewise expanded that recently to all kinds of other blockchains, tokens, protocols, etc. And in particular, are very interested in the use of smart contracts as a way to enforce Sharia principles and ensure that the entire train of transactions is Sharia compliant. And plenty of the big law firms, etc., are keenly working on all kinds of projects, including the tokenized sukuk that Fusang did a while ago. Again, I don't need to read through all of this, but we've now done 15 tranches of these tokenized sukuks. We've done 234 million worth of issuances. And most interesting to me, issued them at an average profit rate, what sukuks use instead of course, interest rate, very, very close to the US risk-free rate. And depending on the month, a slight premium or discount to the risk-free rate, but never usually more than, let's say, 50 to 20 basis points, which is quite unusual for a lot of Sharia instruments because, again, you have these forced buys. If you look at it as an analogy at green bonds, for example, the interest rates often are a discount to the equivalent risk-free rates or interest rates. Skip over all that stuff. And with the last 2 minutes that I have, most interestingly to me, I guess the question is, well, what's next? So you've got all of these very not digital Islamic financial institutions. You've got 1 billion new customers. coming online that are unbanked, that need banking services and want it in Sharia compliant form. And it's something that a lot of the world's traditional financial institutions, including the big fintechs today, have overlooked. And that's why you have a whole new crop of people coming up trying to use new tech in terms of how to serve these people. Sharia compliant stablecoins are something that we are particularly interested in. Stablecoins are big news all over the world. Sharia compliant stablecoins will have huge benefit because it means that you'll have many more transaction rails, both for individuals and financial institutions to transfer assets among themselves without being limited to the current rails that you have. But I also think that you will see Sharia compliant versions of all the other things that Wall Street banks are pursuing. Tokenized bank deposits are one. You'll start to see Sharia compliant HQLA coming online and being used as a way for Islamic FIs to actually do collateral settlement with each other. This is a particularly big gap because there isn't a lot of Sharia compliant HQLA, and being able to move tokenized versions of it around, I think will be very interesting. And then a little further afield, you'll have, again, without getting into too many details, the more interesting Islamic finance structures out there, more equity-like and fund-like structures that a lot of people are talking about and bringing online. There are insurance structures, ways of pooling risk. Again, in many ways, I think that this will parallel developments you're seeing in the non-Sharia compliant world, just with people coming up with Sharia compliant versions. And perhaps most adventurously, I think that you'll start to see DeFi-powered lending pools. So similar to how you've got protocols like Aave that have become quite popular, you will start to see protocols, I think, based on very similar principles that can adhere to Sharia compliant rules, figure out how to build in that sharing of profit and loss while still allowing individuals, corporates, etc., to come and effectively get assets, to get investment from these pools as opposed to going through traditional financial institutions. So that's a bit of a gallivant in